Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? Hope you're having a good day. Did you see the stock market today? Well, we got a lot to cover here, and of course, we'll go over all of that there. I do appreciate you guys hanging out, and a big thank you to all of you who have joined us here at Jazz Wealth. I just kind of wanted to spend the week thanking you guys. I know it's a small company. We're out there. We're trying to help. We're trying to show you that we're, doing more than the average bear, and I appreciate you guys that have given us a chance. Really do. Thank you. And maybe we'll do a special class or something coming up just for you guys that not only join us but support us here on the YouTube channel. So maybe some geeky research stuff in the works there that we'll do as a public live class. Anyways, we're financial advisors here at Jazz Wealth. No need to give you the sales pitch today because the website says everything you need to know, jazzwealth.com. And feel free to reach out to us if you'd like. If you have questions about us or just wonder how we do things here, there's a couple videos on our page there. You could also reach out, get some more information on us, and we're happy to help you there. Wow, just this stock market, interesting. We got a little bit of a sell-off today. On the right-hand side of your screen, you can see the Dow was down almost 3%, S&P 3.5%, NASDAQ basically 5%. Rather interesting day. Let's just dive right into it. Take a look and see what we got here. I'll go over to the NASDAQ first because this is a rather interesting day. Almost the biggest one-day drop from highs ever in history. We would have had to have fallen 5.55% to match the last time, which was February 2011, that we hit highs and then fell in one day real sharp. We got basically a 5% decline today, but it's not going to be a record day, so just know it has been worse in history, and somewhat recent history, by the way. If we look through the NASDAQ, well, it's going to be your Apple pulling back here. I beat this to death. I'm not one to tell you I told you so. I love to be the guy that tells you ahead of time. And on Monday, even on our video, we covered how just extended Apple was. It's hard to predict a pullback, but when you look at that, you say it just never gets as extended as it is. Check out our FinTips video on Monday if you want to see the types of things that we were looking at to identify really overbought conditions for Apple, but doesn't make it a bad stock. It fell 8% today. It was just overdone in the short term there. Very normal to see a pullback. You just normally don't see it all in one day like this, but totally cool. This doesn't make it a bad stock. It's not a bad investment. If you own it and you've got a great profit, maybe it doesn't mean a reason you got to run away. Maybe you take some profits or whatever, but that's kind of the theme of today was profit taking overall. So that didn't help the NASDAQ much on the day. Microsoft didn't help either. Got a 6% gain on that one. Wasn't as extended, but most would argue it was due for a pullback, and it basically came all in one day. So rip the Band-Aid off, as they say. Amazon pulled back as well. Look, your tech names, your Facebooks, your FANG stocks, Microsoft, Nvidia, those really all were the weak areas today, and that selling caused people to go and consider selling other stuff. So lots of sectors lower on the day. Well, all of them actually. So we'll talk about that as well. You got Tesla down about $40 on the day, 9%. Super overbought. We've covered this in great detail. Also in our notes from Jazz, same concept here. Just a little overdone. These guys were doing the heavy lifting. They have since stopped doing the heavy lifting, and that's a recipe for the markets to fall. I've said it numerous times where we made the joke and reference about, Michael, where's Michael at? I know Michael's watching. I just mentioned it to him, that if all of your buddies are going out fishing, and you guys all start fishing, and slowly, one by one, your buddies stop fishing, and they go sit and start sipping some drinks or peanut butter whiskey, and they're all sitting there, you're catching less fish, right? There's less action. Well, what happens when the last guy decides, who's catching all the fish for the camp, what happens when that guy says, guys, I'm done, I'm going to take a break? All of a sudden, no fish. Same in the stock market. If you have a handful of stocks doing all the heavy lifting, when they finally take a break and start relaxing a little bit, everything's coming down with it. That's the best analogy I have for you there. Let's move on to the Dow. The Dow's actually gone negative for the year with this move here. 2.5% down on the day. I don't know if it's a big deal. It's down a fraction of a percent for the year. It just went positive. But if you look at the Dow, you got Salesforce, 4%. What a great week for us to decide to post some geekier videos for our FinTip series. Monday's video helped kind of explain this. Higher price stock, bigger weighting in the overall Dow. You take out lower price stocks, you put in higher price stocks, those are going to have a big weighting on the Dow. Salesforce was officially your biggest drag on the Dow today, and remember, that's a new addition to the Dow, and that's all right. So normally it would have been Apple dragging down the Dow today, but because now Apple has less than like a 3% weighting, well, now you get what's going on there. So also you can check out our video on Monday. We covered it in more geeky detail. S&P pulled back today. Nice little pullback. Tech was your weakest area of the day. I would say that there were a lot of sectors that did okay. They lost on the day, but there were a lot of sectors that just kind of, held up. They showed relative strength against the market. They didn't seem all that weak. It just seemed like broad index levels selling today, which caused those sectors to be lower. I'll highlight that here in just a second. But first, our FinTip series. It's a short, simple, quick video series that we do on YouTube. You just go to our website, go to youtube.com/jazzwealth. You can even search by FinTips, the playlist. This week we covered the Dow changes, Apple being really extended. That was my hint. I recorded that over the weekend. And then yesterday, what we actually covered was September performance being a weaker month. How is it a weaker month? Why is it a weaker month? Showing that data and all that stuff that we usually save for our clients, and we also put in the research section that we just started as well. Tonight's going to be a real cool class. We're going to do all the geeky stats behind elections and how they affect the market. If a Republican loses the White House to the Democrats, what happens to the markets? If a Republican, which is currently who controls the White House, stays in office, what happens to the market? We're going to go over all that performance from now till the end of the year in a real simple, easy way. I think I've kind of laid it out to share with you there. So if you're one of our customers, grab a glass of your favorite thing to drink, peanut butter whiskey, and we'll join you in there tonight. And we'll also spend some time going over the markets, all that good stuff as well. That's all I got. Let's go to the sector breakdown here for the day. See what's going on. You can see all red on your screen there. Kind of cool how those colors look, but not if you happen to own any of them. You got tech, biggest loser on the day, almost 6% loss. Biggest drop since the whole virus mess. Actually, you got to go back in here and find a day that was down even more. You're going back to March before you find a day that was as weak as techs were today. Apple, obviously, bigger contributor to that decline. Microsoft, second biggest. These two were responsible for half of the losses in the tech sector today. Every stock was lower in the sector except for, and it didn't hold, Xerox was the only one that was positive at one point today, and it sold off as well, so every tech stock lower on the day. Communication services, smaller sector here, but 3.3% to the downside. Money in this sector left the movers, like your Facebook. These have been your movers lately. Your Google, which has been hitting new 52-week highs. It left that, and I'll mention maybe Netflix as well. Money coming out of there, and it went into names like Verizon. So Verizon was actually positive on the day. AT&T was positive, did finish lower on the day, but you saw money coming in there, lots of extra volume. You've got volume, and you've got basically a flat to positive day. That lets you know that that's where money's going, right? So they're not leaving the communication services altogether. They're just moving over to names like that. I would argue Disney had a decent day as well. It was down, I get it, but decent day for that one as well. Consumer discretionary stocks pulling back 3% on the day. Really, your extended names were the ones that saw the profit taking. You had your Amazon pulling back on the day. You know that Lowe's was beating Home Depot in terms of performance. Very, very strong stock. We mentioned this numerous times, and that one pulled back today. More profit taking in Home Depot as well. And the money went from those names into, I don't know why, Royal Caribbean. In the consumer discretionary space. Royal Caribbean was positive by 2.5% on the day. Carnival Cruise was positive by 5% on the day. You had PVH, which is like Tommy Hilfiger, Calvin Klein, things like that. 3.25% gain on the day. PVH, by the way, beat on earnings by 256. So they were expected to have a loss. They had a gain of 13 cents a share. Revenues came in better than expected. Money went over to the good news today. Kohl's 2.5% higher on the day as well. No real exciting news there with their earnings is already done. That was yesterday, I believe. Anyway, so that's where the money went to in the consumer discretionary space. I would argue that financials did okay today as well. It's a tough sector to get excited about, I'll give you that. But financials down only 1.5% on the day. I thought they held up pretty well there. Many of the names were higher most of the day. JP Morgan just barely went negative at the end of the day. American Express was a slight gain on the day. It did sell off towards the end of the day, but I thought that was kind of interesting. CME Group held up okay considering the day. And Discover actually was up 3.25%. So in the financial category, which is not one that most people are excited to go run to, you had some strength, right? So if you're looking for that silver lining of maybe the world's not ending and all that great stuff, that's what you got right there in the financials. Kind of wanted to break these sectors down a little differently than I normally do, so you could try to find opportunity if you're looking. Energy. Was the strongest today, and I think ended the day as the strongest sector. It did end the day as the strongest sector. Yesterday it was the weakest. Today was the strongest, although down just a little bit. Yeah, at ExxonMobil, only down a touch, right? Getting kicked out of the Dow earlier in the week. Not too bad. Schlumberger stands out. Had a 2% gain on the day. Very quiet stock. There's not a lot going on here, but you like to see that hint. I don't know if Schlumberger is going to bottom here and start moving higher, but this is your first hint that maybe it's trying to do that. Just maybe. It goes on a watch list for sure. And that's our sector breakdown here for the day. Let's go over to new highs, new lows. Okay, believe it or not, you had 17 new highs on the day, and believe it or not, you had no new lows. Right? So it would have been very easy for something like a Walgreens to fall to new lows, but it did okay. It only lost a fraction of a percent on the day, so that's that one. Today's new notable names, the ones you see on the watch list there, they all have their own reason for making the list. So I'll go through these here rather quickly with you. Kroger, one of these sort of staple-ish stocks, retailer in the food space that did well through the coronavirus major meltdown that we had. That one held up okay, 1.33% on the day. I would argue is not too bad. Progressive in the financial category did okay, right? I mean, it's up a lot. It's due to pull back. It'd be okay if it pulls back, but today wasn't a disaster like some of the tech stocks that you saw out there. Ball Corp, there you go. So this one very extended. You'd think that this one would continue to pull back. You know what I mean? It's sort of, what do you call it? A reverse waterfall, right? It just kind of, it was the upside down equivalent of a waterfall. Maybe too extended. The volume was the biggest that it's been in a while yesterday. So today to see profit taking, I think is very normal on this one. You'd almost think it would continue. Procter & Gamble, I think it's not good when a stock reverses a rather strong day. So remember, you never make a decision on the very first day of a reversal. Today is the first day of a reversal in the stock market, as well as something like Procter & Gamble. I just think you don't like that when it was such a strong day, a wide range day, meaning the distance from the lows to the highs was rather distant, and then the next day it erases all of it. I thought that was kind of negative for them. Copart, also, this seems kind of negative too. Not only was it positive on the day, it gapped higher today. It was actually stronger on the day. They beat on earnings by 31 cents. Revenues came in better than expected, and it sold off all day long. It barely budged to hit new highs and then just melted away. You don't like to see that, so I thought that was rather negative there. And like I said, you got no new lows for the day, so I guess that's a good thing, given it was the first day of a real pullback there. So that's what you have. Let's go over to our watch list here for the day to give you some ideas, things you might want to look at. This one's kind of fun. Remember, there's no show tomorrow and there's no show on Monday, so I wanted to leave you with some ideas that maybe you could look at, things that you may consider in terms of maybe doing a little research, see what you think. Here's the deal. What we're talking about today is a list of stocks that are most likely to announce a split next. We had Tesla, we had Apple, we had a handful of other names, and which ones are next, right? So companies like to split their stock when obviously price is rising, but also they're optimistic about the future. Changes nothing about the stock other than the price. Remember that. Doesn't change the fundamentals. It doesn't change the way the company does business. It's just a split, just to lower the price overall. Now, historically, when a company announces a split, and I covered this before with the Apple thing, when they announce a split to the day they actually split, those stocks tend to outperform the market, right? The S&P. So it's something we want to take a look at. The average gain for a stock that reports a split between the report date and the actual date that they split is 3.5%, median 2.4%. Those stocks are positive 77% of the time. Those are good stats, right? If you're not familiar with the numbers, you're just like, what was he talking about? Those are good stats. That's something we want to know about. So what I did is I put a list together of stocks that are most likely to split next. The first one on the list is Intuitive Surgical. It's had a great run. It's getting a little bit pricey here. Intuitive Surgical split in July of 2003 and October of 2017. Could they be the next ones to come up? I think so. That's why they're on the list there. We'll see what happens. Netflix is no stranger to a split either. 2004, 2017. In 2015, they did a 7-for-1 split. You might see something like that with a Netflix again, especially since they've been kind of out of favor, not really talked about a whole lot lately. NVIDIA has been a beast. It's been a great mover. We had price targets raised to 650 yesterday, highest targets on the street, and it's starting to pull back. But if overall this strength continues, you've got NVIDIA, which has done 1, 2, 3, 4 different splits. The last one was in 2007. They did a 3-for-2 split, so a little bit different there. They are no stranger to a split, something you want to maybe take a look at if they announce as well. Adobe, it's a strong stock already. If they announce a split, could be even better for the stock. If we look at Adobe, they've done a split in 2000. They did a split in 2005, a 2-for-1 split. That's their go-to, is a 2-for-1 split, so they don't split down to $100 or something like that. So maybe one to look at there. IDEX, if you're going into that category, horrible day for these guys, down 6% on the day. But if we look at them, they've done two splits, 2007, 2015, both 2-for-1 splits, maybe something that you want to, I don't know, just one to put on a list there. All right, there we go. ANSYS pulling back, very strong. Obviously, optimism is good for these guys. Performance has been good for these guys as well. If we look at them, they've done two splits, 2004, 2007. That's one to consider there. And United Health, no stranger to a split either. They've done a total of 3 in their life. This one goes on the bottom of the list because they're not performing as well. The sector itself is not performing as well. It's a little bit quiet right now, and you can kind of see that by the price of the stock there. But United Health split in 2000, 2003, 2005. It has been 15 years since they've done a split. They always do a 2-for-1 split. And so that's a different way to look at a watch list that maybe nobody else is going to tell you. Maybe that's not something you're going to learn elsewhere. And so just wanted to point that out for you and see if that's something that you find helpful. Let me know. All right, we'll move on over to stocks in the news, and then I will take your questions. So feel free to ask any questions. I will try to answer them for you, and I'll get ready for our class tonight. I'm really excited about this one. This is a fun one. I love sharing data with people, especially when it's one of these heated topics like politics, right? Like, oh, I don't really care who you vote for, but to talk about what happens, it gives you a reason to cheer, be a little nervous or something. So I like that sort of thing. Very laid back. We don't get into that here, but we'll have a drink, see where it takes us tonight. Hilton. All right, so stocks in the news here. Hilton didn't really respond a whole lot today. I would argue it held up pretty well. They're closing the Hilton in Times Square. I've been there so many times. I've done conferences there. I've done speaking engagements there. They're closing it forever. They're not just saying we're closing it because things are bad. They're officially closing it. That's crazy. That, to me, that was very interesting there. They said, we just can't predict the future. We're not going to even try it. We're closing it. Five Below, up 8.6% on the day there. Five Below beat on earnings by 39 cents. They do a good job of getting you to spend more than $1 at this store. Gets me every time with the candy. Every time. Revenue's better than expected. Here's your breakout. Technical pattern, series of higher lows. You love to see that. Breaking out over equal highs and doing it on a day where the stock market was down. Five Below's got to grab your attention there if you're looking for new ideas. Hopefully it pulls back a little. Microsoft down on the day. The White House says formalizing plans to restrict TikTok and WeChat, I think was the other one. And so they're moving forward with that. In other words, they're saying, we drew a line. We're not going to let you cross the line. Either you get a deal done or not. There's no deal, right? We're supposed to know about this deal. Rumor was it was going to be this week. We didn't get it. Unless it's tomorrow, I don't know. Nonetheless, you got Microsoft down 6% on the day, probably because of that. And tech in general. Campbell Soup beat by 10 cents on earnings. They raised their guidance. Weak day for this stock, all the way back down to lows. That's kind of unfortunate because that makes this stock sleepy again. It gives you nothing to go on. There's no trend. You started having a little uptrend there. Today it was just demolished after reporting their earnings. That's unfortunate. General Motors pulling back today rather aggressively. They're going to work with Honda to get parts. So your General Motors cars could be coming with Honda parts soon. They're going to they formed an alliance there so they can get parts a little bit faster and maybe have a little bit more of them. So General Motors down on the day, 4.7%. A couple others I'll point out. NIO pulled back 6%. Other than that, I would argue that they had a good day. How many cars? They're 3,965 cars. Holy cow, there's a big wasp in here. Whoa. All right. We're going to keep an eye on that one. All right. Well, focus. He's like right on the camera too, man. You just hang out. Stay. All right, 3,965 cars, 100% return year over year. 100% difference in deliveries year over year. Oh boy, here he goes. Okay, we're gonna wrap this up. I don't do WASP. Also, Lucid came out. The other electric car maker said they'd like to race Tesla. They think they can beat the Tesla in a quarter-mile race. I don't know, a little competition heating up out there. Lastly, you got United Airlines up 1 1/3%. They said, look, we're going to go forward with these furloughs. They have to. They have to get smaller. They can't continue the way they are, burning through a ton of cash there. You just can't do it. Earnings tomorrow, nothing. Earnings season's over. Nothing going on tomorrow, and no real dividends or ex-dividend dates to report there. I'll take your questions if I can, and then we'll be on our way. Whoa. All right, let's see what we got here. Can I put this over here? Yeah, let's do it that way. I love it. You like swing trade on Overstock? Boy, that's been selling off nicely, right? Nice consistent pullback and overstock after being extended there for quite a while. Very steady. I'll say the same thing I said yesterday or the day before. Don't guess the bottom on this one. Very tough. If you tried to guess the bottom yesterday or the day before, you might be down as much as 10 bucks. Let it settle. We don't have to pick the absolute low here. I would say this is an option trade if you're looking to do something there, or let it settle, bounce around a little bit. Give yourself a hint that maybe it stopped the bleeding in the short term if you're looking for a swing trade there. Thanks for what you do for us. Thanks for watching. I appreciate it. I love it. I've heard a lot of things going on with New York, but you never know. It's like when there's a hurricane down here. Everybody that's in every other state calls me and says, oh my gosh, I hope stay safe, right? And there's like no wind, no water, but they make it seem like a mess. So you never know. Like they show down here the lines for people waiting to rent U-Hauls and things like that so they can move out of New York. I'm like, I don't know. Is that just the news or what's going on there, you know? Thoughts on Tesla and Apple long-term? Look, if you own it, nothing's changed. You got to recognize stocks breathe in and they breathe out, but when they take a deep breath in, they're going to go and breathe out. That's what you're going to see in the stock. That's what you are seeing in both of those stocks right now. It doesn't make them bad companies. Doesn't make anything wrong there. Speaking of Tesla, they did the SpaceX did their second Starhopper thing today. Pretty cool. I like that stuff. What happened to Guess the Dow? We just couldn't keep up with it, man. You guys are like little animals. We'll probably bring it back if things get a little boring. The virus came in. It was exciting to talk about all this. There's no reason we can't keep doing it. It just got to be a lot to keep track of for me. But that's it. Anything negative about Overstock? They had some good news today. They're cutting some of their fees for their digital. Remember, these guys are in crypto a little bit as well. So no fees for that. Yeah, nothing real bad, just got a little extended. I mean, it's a stock that had a valuation off the charts, which is great. The stock's going up, but when it pulls back, makes people question it. Tesla's going to go through the same thing too. Wrap your mind around the idea that Tesla won't always be, yeah, go Musk, go everything. There will be concerns that come up. There will be slippages in deliveries. Doesn't make it a bad stock. It means that's your opportunity if you've been waiting around. So the news cycle will change on these names. Maybe it started today, I don't know, but you'll see what happens. I love it. Guess the Tesla. I love it. DocuSign, big pullback. Look, DocuSign's market cap is bigger than bigger than 2/3 of the S&P. Is that a little much? Right? So I think that's part of the argument you saw today. I don't think it's bad at this point. The pullback's fine. Got a little extended there on a down day. Yes, it sold off more. Maybe it gives you the spot to maybe time an entry here, but yeah, I don't think it's bad. I think maybe just a little overvalued, but it's hard to argue that when it's running away so fast. Yep. I like it. Remember, you never make a decision on the first day of a new move. We've been in an uptrend here, and what I could do is go back to this example. You have a down day in here. You never say, oh, a pullback, should I buy? Wait. Hold on a second. You'll get more. Let yourself get more. Be patient to get more. Anytime a stock market's been moving in one direction, has one bad day, don't jump in just yet. There's always a little bit more on the bone there for you if you're willing to be patient. That's probably the biggest lesson of the day, because I get a lot of those questions. Oh, been waiting for the markets to pull back. They finally pulled back. Should I dive in? Not on the first day. Don't bite on the first apple you see, huh? How about that? Lessons, fatherly lessons from old Jazz. All right, I'm going to wrap it up there and get ready for our class tonight. I'll see you guys later if you want to join us for Wine and Wealth. Thinking something fancy tonight. Maybe a little different sort of drink. We'll see what we come up with. But I'll join you later. And thanks for watching. Thanks for supporting us. And we'll see you guys later. Enjoy.